This video is your ultimate guide to finding the next 𝗵𝗃. Over the last 21 days since launch, 𝗵𝗃 has risen over 350,000x, and it's changed many lives all over the crypto world. But meme coins can change yours too, but only if you do it right. Don't fall into the same trap that all these other investors are falling for, and actually have a fundamental structure and framework for investing that can help you increase your chances of hitting the next 𝗵𝗃. And in today's show, I'm going to run you through step by step how to actually find and trade profitable meme coins. I've got some very special tips in this video that no one else is talking about that I think can help you become a better meme coin investor. So make sure you smash the like button if you are excited for the show, and come back to this video in the future, even 1 month, 2 months, 3 months from now, when you're thinking about investing in meme coins, and not even just meme coins, but even other speculative altcoins, because I believe some of the tips in today's show will be useful for the next months and years to come, because they really are the pillars of how I invest, and I've just translated this into my meme coin journey. Now, I'm not a professional meme coin trader, but I have gotten pretty lucky in the past. We've hit a 15x on 𝗵𝗃. I told you guys about it live on the show a couple of weeks ago, so that's been a great trade. I've also had other good meme coin trades, like a 30x on 𝗕𝗏𝗄. Also had other 10x's on other meme coins as well. So I know what I'm doing. I'm not an expert, but I've certainly had some luck. And through my experience, I wanted to share some of the things that I've learned with you to help you on your journey as well. So let's get straight into the video on how to actually find meme coins, and hopefully within that, help you find the next 𝗵𝗃. And we're going to run through live some of the strategies in today's show to find the next 𝗵𝗃. And I'm seeing a lot of people shilling their meme coins in the comments. It is meme coin mania at the moment. Firstly, just a quick bit of TA on 𝗵𝗃. We have seen the price obviously perform quite well. What it does is it forms these flags, break out to the upside, formed another flag, break up to the upside, and on the shorter time frames, we're also seeing like mini flags be created and then breakouts to the upside. So what we're seeing at the moment is another flag. Could result in another breakout. Let's see how price reacts on the breakout of this wedge here. It only has a few touches, so it's not the best trend, but that's what I'm seeing on 𝗵𝗃 at the moment. I certainly wouldn't short this thing yet until some of the indicators start ticking over into the overbought territory, which some have. But in this show, I'll give you some indicators on when to actually take profits on meme coins. And for me, not all of them are ticking quite yet. But if we start getting signs of that, then obviously that's a sign to de-risk. We have seen obviously this big breakout. This area here at the 2.6 level is when we actually called 𝗵𝗃 first on the show. Since then, you can see it's actually up more than a 10x, and at one point it was up 15 to 20x. So it's been a very, very good trade for us. And actually in the trading competition, although my initial 𝗵𝗃 entry I didn't manage to get on the comp, I got one last night for a nice 60% profit. So in the ByBit Trading Comp, I'm actually sitting rank 41 now. So I'm making my way into that top 10. I'm actually beating Ran, I'm beating Sheldon, and I'm beating Kyle. So I've just got to maintain my lead. You guys know at the start of the trading comp, I said, all I want to do is beat the other hosts. Right now, I think I'm in the lead across all the hosts, Kyle, Ran, and Sheldon. So I'm winning. Let's see if I can keep the lead up. I'm 58% in profit, rank 41, trying to make this top 10. Of course, there's some amazing prizes for the top 10, which I'm not going to be able to win because I'm a host. But if you made the top 10, you could win $4,000. And for first prize, you could actually win a Tesla. And for second prize, you could win a Rolex. So if you want to take part in the trading comp as well, and try your luck, of course, they do have 𝗵𝗃 listed. Trade with caution. We're going to get into how to do that in a second. But remember to trade with caution. But if you do want to trade it, you can do so on ByBit and simultaneously qualify for the competition. All you need to do is click this link in the description, click the register button through that link, sign up for an account through that link as well, and you can start trading in the trading comp to potentially win a Tesla if you come first prize. So let's get into the strategy here for finding meme coins and how it can actually change your life. Now, I did a thread on this, but I realized that the thread is limited because it's in written format, right? And I feel like if I come on today's show, I can give you a much more in-depth explanation behind some of the key points that I made and also answer any questions. So if you haven't read this thread, there's a link in the description. It's the first link if you want to bookmark it and save it. So you have it there. So you have a written version of this video. But this video will go into a lot more depth than the actual thread did. And I'll kind of use this as the building blocks for how to research meme coins. So today, obviously, we're going to be talking about the basics of meme coin investing, how to find and research strong meme coins, the best meme coin buying strategy. So once you find a good meme coin, how do you actually get a position? Do you ape? Do you ladder in? Do you use TA? We're going to go over that. And also how to know when to take profits, because investing in meme coins can be very profitable, but unless you're actually realizing those profits, the life-changing money won't change your life. So if you make life-changing money, you have to make sure it does actually change your life. And the way to do that is through a very sound, well-thought taking profit method, which I'm going to talk through mine today as well. So here's the first thing to note about meme coins. When you buy any token, not just memes, but altcoins as well, you're buying it on the premise that someone will in the future buy it off you at a higher price. Now, this is especially true for meme coins because there's less fundamental drivers behind meme coins and there's more psychological drivers. So whenever you buy a meme coin, what you're really doing is you're betting on the fact that someone else in the future is going to be willing to speculate on that coin at a higher price than you speculated on it on. Now, this is known in economics as the castle in the air theory. So this is a well-known theory in the stock market, and it was popularized by economist John Maynard Keynes, whereby investors try to build castles in the air and think of probable rises in price in the future rather than estimating the intrinsic values of stocks. So basically the castle in the air theory, a lot of crypto investors use it without even know that they're using it. And it's basically when you build a castle in the air, and try and speculate on a probable price rise rather than using, let's say, like a discounted cash flow method, revenue flow models to work out the intrinsic value. Because with something like a meme coin, right, there's no real intrinsic value. I can't work out X amount of revenue leads to X amount of cash flow, which leads to X amount of profit, and the market's valuing this niche at a 10x, so it's worth 500 million. You can't really do that. It's more just like, okay, I am speculating here. I'm building a castle in the air that more investors are going to come and buy it at a higher price. And this is a psychological thing that we see not only in crypto, but in the stock market. So if you want to read about more about this theory, I recommend reading John Maynard Keynes' work, because you'll get an idea as to kind of the psychological drivers behind it. Super interesting stuff. So the goal when building a meme coin position is to actually build a position before the rest of the crowd starts buying. So the goal isn't just to ape in at any cost. It's actually to pick a time where you believe that you're early enough that other investors are going to start buying that same coin off you later. Once again, building on this castle in the air theory. But of course, this is a gamble, right? Because since you don't have strong fundamental intrinsic drivers, these meme coins have like less fundamentals than your typical investment. As I said, there's no cash flow models or anything to like base evaluation off. So you have to treat it as a gamble. So how I like to think of meme coins is they're like the games at the casino, right? They're like the slot machines. It's like the blackjack table. It's like the roulette table. These are your meme coins. Every meme coin looks different. Everyone has a different purpose. Every meme coin has different odds. But at the end of the day, they're all gambling. And if you want to think of meme coins as the games, then you can think of the exchanges and the Ethereum network, where the vast majority of meme coin trading volume is occurring right now, as the house. And as we know, the house always wins. So over the last few weeks, aside from meme coins, one of the biggest beneficiaries has actually been the Ethereum network, because of this insane supply burn we're seeing, because everyone's trading memes, the gas prices are going up, more people are burning ETH, and now Ethereum over the last week, if you aggregate it into a yearly figure, ETH's actually minus 2.5% deflationary now. So if the same amount of trading volume, and it probably will die down, but theoretically, if the same amount of trading volume occurred this week, every week, for the next year, you would see ETH become a 2.5% deflationary asset, which means its supply is reducing by 2.5% every single year. This is only possible due to the merge. The merge made Ethereum proof of stake, and it stopped issuance from the mining rewards. So when they stopped the mining rewards, the actual ETH burn has now factored much more into ETH's monetary policy, because it's not being counteracted by additional supply coming onto the market. So ultrasound money, although this has kind of been a meme at times, looks like it's holding true in a way, because the meme coin rally and the meme coin hype train has actually been a major beneficiary for the ETH network. So the fundamental networks that meme coins trade on, and the networks are like Ethereum, Solana, ByBit, Binance, the exchanges, albeit the exchanges only list the big coins, so then they get a fraction of the volume, but they still do well. All these guys are your casino, and the meme coins are the games at the casino. But there's a major difference between a meme coin and a casino game like roulette. If you walk into a casino and you decide to play roulette at a table, you're instantly forfeiting a minus 5.26% house edge, because the casino has the edge on you. The number 0 basically creates a small edge for the casino, whereby over time, although you may win a lot of money in the short term, people are likely to lose in the long term. Now, in crypto, this is a little bit different, because a house doesn't have an edge on you. every time you trade a meme coin, you're not instantly losing 5.6%. To be honest, if you're only trading very small size on the Ethereum network, then the gas fees can eat into your edge. So that's something you have to calculate. How often are you trading in and out? If you're doing a lot of trading in and out, how much percentage is that actually taking up of your initial position? Definitely factor that into your EV calculations. But in theory, in a non-gas environment, the house doesn't really have an edge in crypto. You can actually create an edge because there's something called information asymmetry in crypto, where if you do more research than the next person, and if you're more clued in, if you have more information than the next person, since information in crypto isn't readily available in crypto like it is in the stock market, like it is in the property market, there's actually an asymmetry there where you can take advantage of that information. And that discrepancy is how you can create an edge. So today's show is really about finding a way to create that edge so you can take advantage of information asymmetry. But you do have to be wary of gas, of course, when you're trading, and try not to wreck your edge, straight away. Now, admittedly, it's harder in meme coin trading to create an edge than other styles of trading. This is because meme coins, there's so many unknown variables. An undoxed team can pose systemic risk to the protocol, the origins of the protocol as well, and the team's goals may be misaligned with the holders. That can create an unknown variable. There's also the unknown variable of memeability. The number one constituent of meme coin success is the hype factor. And you don't know if that hype factor is going to catch off. Now, there are, and we'll get into this in a minute, statistics and data that you can use to quantify whether a meme coin's gaining traction before it rises in price, but you don't always know that it will. So sometimes you might see a meme gathering a lot of hype, and for whatever reason, it just dies off. So it's hard to really quantify sometimes the memeability of a meme coin, and that's an unknown variable that can definitely make it harder to create an edge. Now, if I invest in a fundamental L1, and I know multiple things are coming for that layer one, and I know that it's gaining network effect over time and adoption, and I can kind of do a cash flow model, and I compare it to other comparables, I can kind of get a good idea of that project's fundamentals, right? And in crypto, like if I spot a DEX, and I see the trading volume going up, I see the revenue going up, I see they're introducing a new staking mechanism, they've got a V2 which increases efficiency by 30%, those would be a fundamental driver behind why a DEX may rise in price, and most of the variables there are known, assuming that the team is public. So in meme coin investing, you don't have the luxury of treating it the same way as you might treat it an L1 or a DEX. It's much more speculative and harder to create an edge. But of course, today's video is about increasing an edge, and I'll give you 5 ways that you can actually increase an edge live on the show today. So the first way to increase your edge when buying meme coins, so taking into account that it's a casino, taking into an account that it's gambling, let's assume you want to play the meme coin game. How do you do it to find new meme coins? How do you best play the game to create an edge? The first step is to monitor which coins are performing. It all starts with price action. I prefer to get into something that's showing positive price action a little bit later than trying to bet on something the first day of launch, which may lead to more gains, but is much more speculative because you don't know whether it's taken off yet. So the first thing that I would do is I would go onto an app like Dex Tools, and I would monitor over a period of time, maybe a couple days, what are the daily gainers. So go into Dex Tools, go into the top gainers tab, and look at what are the top gainers. This will give you a nice basis to work out which meme coins are being speculated on. Another important thing to look at is the liquidity of a coin and the volume of a coin. The lower the liquidity, the more subject it will be to crazy price pumps, but also the more crazy it will be subject to price dumps. The market cap is important too, because the market cap dictates the multiple that you can aim to receive, but the lower the market cap, also the more risk. Why? Because the higher the market cap, the more holders, likely the more hype, likely the stronger the fundamentals. Now, not always. There may be discrepancies here where a 60k market cap meme coin actually has better fundamentals than a 5 million market cap coin, but generally, meme coin fundamentals get better as they increase in price because more people hear about them, they gain more steam, they kind of gain more validity in the meme coin community. The joke gets bigger, more people enter, the community grows, and that kind of fuels the next leg up, like we saw with PEPE. We also saw this with other meme coins as well over the last couple of weeks, like 𝗏𝗚𝗘 and before it rugged WSB. Now they've got a new coin that you'll see trending on Dex Tools as well. But yeah, this is what I would do. I would go and I would look at the top meme coins, and then I would start filtering. So, okay, these are the top ones for the day. Don't just take the ones for the day. Also look at the hot pairs, the ones that people are trading a lot of volume of, and start to take note of, all right, what's its score? This is basically a reliability score. Maybe ignore the ones with terrible verification, take some of the good ones, and then start creating a list based on some of the top performers and monitor them. And you can monitor them by building your own like CoinGecko watchlist or your own DBank watchlist. However you want to build a watchlist, you can build it and start monitoring these coins. The other thing you can do is use CoinGecko. Now, these are just simple ways to look at price, and we'll get into the more advanced ways to work out a project's fundamentals in a minute. Price is where everything starts, right? This is where you get an idea for where the hype's building, because price often does follow hype. Basically, all the time it follows hype. So it's important to look at price first. CoinGecko has another nice dashboard for you. You can see right now we've got a variety of meme coins trending. You can toggle where the rankings are here. So top 100 will obviously filter out most of them. You'll only get like 𝗕𝗐 and PEPE and some of these other ones. And then obviously there's a lot of legitimate projects amongst this as well. Top 300, you'll start to get a few more. Some of the bigger 𝗕𝗎𝗓 coins, etc., like 𝗵𝗵𝗕𝗃𝗧. And then if you go to top 1,000, then you get more degen. The thing is, though, not every coin is listed on CoinGecko. So the ones listed here are usually your bigger ones. Your smaller meme coins, I think DexTools is the #1 place to monitor the pairs, chart them, because a lot of them aren't on exchanges, so they won't be on a trading view, and actually take note of the daily gainers. So I would really use DexTools as your #1 website for meme coin hunting. This should be your go-to every single day if you're interested in this game of monitoring the market, looking at what pairs are increasing, look at what pairs are decreasing, try and spot trends through the data, through DexTools. That would be my #1 tip to monitor which coins are performing. Once you've kind of gone through and you've seen something, okay, let's say 3 days in a row, this token has performed well, it has decent liquidity, the market cap's low, but it's not low enough that I'm taking a huge risk. Maybe it's a few million. Of course, it is a huge risk, but less of a risk. It's a few million. It looks good. The next thing you want to do is work out whether it has a strong culture. This step, which is step #2, is the most important step in researching meme coins, because meme coins only succeed if they have a strong community. I think community trumps all other variables. So the Dex analogy that I used before, you might want to look at the team really strongly. You might want to look at the roadmap really strongly. You might want to look at the PE ratios and the revenue growth really strongly, and kind of do quantitative data on it. With meme coins, if the community's good, the data can go out the window. Like, you can disregard 99% of the other fundamental indicators if the meme's good. PEPE, when it first launched, it had no fundamental indicators. The only real fundamentals you had was price going up, holders going up, trading volume going up, and the meme gaining steam on social media. So there's a few ways that you can work out whether a meme is gaining social performance, because this is so important. The first thing you can do is monitor social metrics on LunaCrush. So let's say you find a coin that's performing well price-wise. You want to go into an app like LunaCrush, and you can actually search it in the top corner and see how the social mentions tracking. So if we use PEPE as an example, we can look at PEPE in LunaCrush, and on the left-hand column, we have social metrics, social engagement, social dominance. And you can see here the trend over the last week has been super strong. If we go out onto the monthly chart, we can see how substantially it's grown as well. So when you're looking into a meme coin, you can look at whether it's starting to gain dominance in terms of social metrics. So if you go to LunaCrush's homepage, you'll see the coins that are gaining the most steam. Dino Coin right now is one of them that's gaining the most steam in terms of its alt rank. It's actually ranked 3 on the platform for social mentions. 𝗕𝗬𝗕𝗧 as well. This is starting to gain steam. 𝗵𝗵𝗕𝗧 is back in the top 10. This is your indicator as the bonks in 19th. This is your indicator as to if a project's getting social engagements. Now, they primarily use Twitter. So one thing you got to notice is that there's a lot of bots. LunaCrush does try and exclude the bots where possible, but it's inevitable that you are going to get some bots. So keep that in mind. This would be your #1 place for quantitative data on whether a meme coin's performing. And you can enter the address in the top right corner and research a coin further to work out whether it's gaining social traction. But I think the anecdotal experience is just as important as the quantitative experience. And this is actually going onto Twitter, seeing how people are talking about it. So I know it sounds silly, but look into what kind of memes they're posting. Because for a meme to actually succeed, it needs to be entertaining. It needs to be fun. It needs to be memeable. And it needs to be easy to understand. So the only memes that succeed are the funny memes. Why did PEPE succeed? Because it was funny. Like, the PEPE frog was already a very popular meme. It was very memeable. It was very easy to understand. Everyone already knew it. It was easy to invest in because the ticker was short and it was a low price. So there was low barriers to entry. It basically ticked all the boxes for a meme coin. So you want to tick those 3 boxes as well, that it's fun, easy to understand, and entertaining as well. And once you've done that, the only really next thing to do is to go into Telegram, see how people are talking about that coin. So join meme coin Telegrams and join the Telegram of the project itself. Go into the Discord. Start researching in that project's Discord. Is there hype? Be wary. A lot of Discords do bot chatters, but usually you can work out if they're organic or not. Go into the Discord and verify how people are talking about this project. Does it have memeability? Does it have a strong community? Community is so important. And of course, look at Twitter. Are you seeing the big creators starting to mention a coin? And keyword here, starting. Once they're all talking about it, it's probably too late. But are you starting to see some of the small to mid accounts talk about a coin? Because you got to know how the flow of information works on Twitter. Typically, what you see is the small accounts post alpha, then the middle accounts pick it up, and then the big accounts are usually last, and they'll be the last ones to pick it up because they have to be a bit more selective with what they share to the audience. So usually the big accounts are posting less risky stuff, but also there's probably less gains to be made once a big account starts posting it. The small and the medium cap accounts, so your 3,000 to 50,000 follower, that kind of range, those accounts, monitor them to see what they're starting to talk about and see if there's a trend. Is there one that people are starting to talk about, and does that line up with the Lunar Crush data, and does that line up with the Telegram and the Discord being super active and the meme actually being good? If that is all lining up, then this may be a decent meme coin to look into. The next thing you probably want to do when you find that project is ask yourself, who's the team? Are they doxed? Most of them aren't. So if not, have they shown competence building hype? Do they have like an interesting rollout? Do they have an interesting roadmap? Do they have like giveaways? Like, are they really proactive in trying to promote this thing? And have they shown competence? Have they built previous projects? What are the tokenomics like? So this isn't always relevant when it comes to meme coins, but sometimes projects, meme coins will introduce burns. So they'll have like their own decks, and they'll have swapping, and they might use some of those fees to burn, to pay back to stakers, and they'll burn tokens as well. So look into if there's significant dilution to come, and if there's burning mechanisms to reduce token supply. Now remember, a lot of the time, your best meme coin investments will be the ones that don't have dilution. So you probably want to look at projects with the market cap fully diluted into the market. If we look at PEPE, they launched 420 trillion coins, but 420.69, hilarious. But they still have 420.69 in their total and max supplies. So they're not diluting anything. This doesn't look like 420 and this is like, 1 quadrillion. No, they've kept it fairly even. And the reason they've also put a lot of supply out is to keep the token price low. Psychologically, for some reason, investors prefer lower prices. Probably one of the reasons why, meme coin investors or altcoin investors prefer to buy like a meme coin sometimes over like Bitcoin. They prefer Doge over Bitcoin because, I could buy Doge for 10 cents. Bitcoin is 30,000. Of course, that's like a huge misunderstanding because all that really matters is market cap. Token price means nothing. But newbies that get into the space, they always look at price. And when a meme coin's cheaper, for some reason, it has that psychological appeal that, I can own a trillion PEPE or I can own 0.0001 Bitcoin. I would rather own a trillion PEPE. That's kind of how people start to think. So keep that in mind as well when it comes to supply. Now, all these questions that I just posed, they are important and they do add to the fundamental strength of a coin, and this helps you build your edge. But remember that with meme coins, these questions, these fundamental drivers are much less important. The most important is the meme factor. So step 2 by far is the most important. You can kind of disregard step 3 a little bit. Of course, it's important to work out whether there's a strong team, and token supply is probably a very important thing to look at before you buy something, but they aren't the most important things when it comes to memes. The most important thing is memeability. Now, the problem is with memeability, due to the ease of creating a token, due to the ease of generating hype, because there's a lot of people speculating on these tokens, there are constant rugs and exploits in this sector. So I think one of the most important ways, and it's not the most sexy way, but certainly one of the most important ways to actually create EV, create a positive edge in the meme coin world, is to avoid rugs and exploits. You don't just need to make money in this space. You actually need to avoid the detriments in this space. And if you can do that, you are going to increase your edge overall. Your net edge will increase if you can just avoid rugs. Now, of course, if you're playing the meme coin game and you're investing in 10, 15, 20 meme coins, then you're going to get rugged once or twice. That's just going to happen. That's just the space. It's so risky. It's so speculative. But there are little things you can do to work out whether something could be a rug or an exploit. There are 2 very cool methods that I don't see many people talking about that I want to talk you through now. One is Token Sniffer. The other one is bubble maps. Now, I want to take you through Token Sniffer first with PEPE as an example. So let's go to the Etherscan of PEPE. Obviously, whatever meme coin you're looking at, you can do the exact same thing. We're going to copy in its contact address. This is the actual address, the code of the token. So we're going to copy that on the PEPE Etherscan. You can access the Etherscan through DexTools or CoinGecko for any project you want. Go on to tokensniffer.com, and we're going to enter in PEPE. You'll see a little pop-up come up. Click that, and what it will generate is a report that gives it a security score. So this score will basically work out how risky or how not risky it is. So it's basically an audit. So clearly not everyone has access to like an industrial code audit, especially if you're retail. But luckily there are AI tools like Coin Sniffer, where you can actually kind of get a little fast, quick audit and summary based on predetermined variables. So they've given PEPE a 50 out of 100 for safety. They have a swap analysis. So they say, yep, the token's sellable. The buy fee is less than 5%. The sell fee is less than 5%. That's good. Yep, the contract's good. It's got a verified contract source. The ownership is not renounced. The source does not contain an owner contract. The creator is not authorized for special permission. This is good. On the holder analysis front, they did raise one red flag. So although the creator wallet contains less than 5%, so the creator is not holding many tokens, other holders possess less than 5%. So there are a few whales which dominate the percentage of supply, which means you are prone to dumping. But this is going to be very similar across most meme coins, but this is, a slight headwind when it comes to PEPE. The other thing is, although they have adequate liquidity and adequate initial liquidity, at least 95% of the liquidity burnt/locked for at least the last 15 days. So you had 95% of the liquidity locked for 15 days or burnt, which does put a constraint on the liquidity here. So what they've done is they've used all of these factors to work out a score, and they've given it a 50 out of 100. Now, meme coins are notoriously low on the score because they aren't perfect. If you put in another token, like a good token, a proper product in here, you're probably going to get much closer to 100. You might get 80, 90. But most meme coins are going to sit below 50. 50 is okay for a meme coin. If you see 10 and 20 and you're getting a lot of issues here, then your risk goes up. And that might be an indicator for you to stay away from a project. If you have a score of 10 out of 20, the token's not sellable, there's huge fees, they don't know who owns it, there's a crazy amount of supply owned by one wallet, that's usually an indicator for a rug. Now, the holder analysis is by far the most important section here. This is essentially the percentage of supply that's held by certain owners, right? This is your number one rug pull indicator. Now, there's a website called bubblemaps.io, which I also mentioned in my Twitter thread, which is the number one way to assess whether something's a rug or not. Token Sniffer might not show you that it's a rug. It might give you an indicator as to whether it's got like liquidity constraints. But Bubble Maps is your way to work out whether it's actually a bona fide rug, because your rug pulls, when a team rugs, they want a huge percentage of the supply, right? If you create a rug pull, the only way to really make money off that rug pull is to create an environment where you own the majority of supply, or you own a significantly overweight percentage of the supply. If you do that, you'll be able to dump and basically cash out of the project. If you don't do that, if you're a project creator and you only hold 2%, then it's very hard to rug, because even if you sell all your 2%, well, the project's still got 98% circulating and you don't actually profit that much. So typically what we see from rug pulls is the majority is in a few wallets. Now, what they'll do a lot of the time is they won't just hold the circulating supply in the first wallet that interacts with the mint contract, because that would be a telltale giveaway that it's a rug pull. What they'll typically do is they'll transfer to like 10 other wallets and they'll mix it, and they'll get tricky with it, and they'll try and put it into other wallets to disguise the fact that they're holding it. But the on-chain environment is transparent, and you can actually see which wallets are connected to each other. So on bubble maps, these individual bubbles are individual wallets that hold tokens. But anything with lines connecting to more bubbles, this is the PEPE example, any one with lines connecting to more bubbles are wallets that have interacted with the same contract. So we can see here that wallet 9, 13, 15, 16, 17, 21, 23, they're all connected. We can also see that wallet 5, 18, 45, 46, 32, 29, 26, and 18, they're all connected. We can see wallet 18 is connected to these other wallets as well, through this wallet in the middle. So the bubble maps gives you an idea as to how centralized the holdings are, and it's really fun to play around with. It's like a little jellyfish going around. It's quite fun to play with. But the bubble maps gives you a basically a cluster percentage, which allows you to work out how concentrated the holdings are. What Token Sniffer does is it uses bubble maps. It's got its own bubble map. It uses bubble maps to create a score. So it said that all other holders possess more than 5% of the circulating token supply. And we can see here on the bubble map that there is a high percentage of holders that hold the token, but not crazy amount. 5% is not crazy, but so I think for PEPE it's okay. But something to still keep in mind, that a lot of the big wallets are holding a significant amount of the supply. You can see what percentage they own as well. 1.6, 0.4. This is Mexi, this is 𝗲𝗏𝗶𝗺. A lot of this is just exchange holdings. But some of these are like these, especially this yellow cluster. These are random wallets, and these are likely team members that own 0.4%, and you can add them up and work out what percentage of the supply they hold. Now, they only hold really 5% if you add them all up manually, but it's still like a significant percentage, right? So that's something to keep in mind. Now, with your PEPE is okay. I feel like for a meme coin, that's okay. But for like your really risky coins, that's something you definitely want to look into, because that's a number one way to avoid a rug. You know, if you put in the contract address and it's showing that 40% of the supply is held by 5 wallets, then huge red flag that it's a rug pull. Massive red flag. So you want to run any meme coin you're buying through bubble maps to work out how centralized it is. The team obviously are going to hold tokens. To be honest with you, most of these teams are creating these tokens just as a vehicle to make money. They're not making a meme coin to make you rich. They don't give a shit about making you rich. They give a shit about pumping their own bags. The creator of PEPE, all they probably really give a shit about is making millions of dollars. And to be honest, that means they're aligned with you. They want to pump the token price as well because they make more money. But the second those wallets start dumping, then that alignment drops, and they're no longer aligned to help the project perform. They're just aligned to cash out and use you as exit liquidity. So very important also to track those wallets and monitor whether they are selling, their principal holdings. So here's step number 4. This is step number 4 out of 5 out of trying to find and research meme coin fundamentals. This is very important. Very, very, very important. So whenever you invest in a meme coin, you have to work out whether you want to follow the leader or play the rotational game. Now, the leader is the leader of a meme coin niche that's typically less risky and has a higher market cap. So for example, Doge is the leader of the Inu coins. After Doge, you have a million other Inu coins that are your kind of speculative spin-offs of Doge. PEPE is now the leader of the frog coins. And you can now see that there are hundreds of other frog type of coins starting to launch onto the market that are kind of benefiting off PEPE. It's very important to work out whether you want to follow the market leaders, so these are niche specific leaders, or whether you want to play the rotational game. Getting into the leaders means that you're not risking as much because it has more investor mindshare. More people are invested in that token. More people speculate on that token. The meme's usually a lot stronger. The problem is the market cap is also higher. So even if it's a good meme, at a high enough price, it becomes a bad buy. And even the bad memes at a good enough price, they become a good buy. So a lot of the time, the best play is to actually just go long the leader. Fabian did a good post on this that I would recommend reading. He said, time and time again, I've learned whenever a new trend emerges, the best play is usually just to go long the leader. We tend to think it's already pumped. Let me look for a catch-up play. But as long as new money's flowing in, the leader captures the bulk of it. It's also relatively safe or safer because you know that it has the most staying power, so it carries the best risk reward when considering both sides. And if at any point you think the leader will correct, you definitely don't want to be exposed to anything else because they'll correct way harder. They're running on a higher beta ratio. Finally, and perhaps the most important, is that it allows you to deploy with actual size. I just mean that for whatever amount of capital you're willing to risk and play that trend, the bulk of it can be quite comfortably put into the leader. Everything else is a potential landmine or to a liquid and can't be aped into with meaningful size. This is the problem if you're a whale that you'll experience. I've experienced this. I'm not a huge whale, but even if I invest a few $1,000s into a meme coin, it often pumps the freaking price if it's low enough cap because it doesn't have liquidity. So there are constraints as well, depending on how much size you trade with. And as an added bonus, It's also the first in line to benefit from potential catalysts like exchange/perp listings. True, the bigger coins get listed first. Media coverage or other forms of adoption. I started playing the meme craze when 𝗵𝗡 was 40 mil in market cap, never touched it once. In hindsight, I would have been much better off and saved myself a lot of time if I just bought the fucking leader and chilled. Lesson learned. 100%. He's 100% right. In my opinion, oftentimes following the leader, risk reward wise, is the better play. Now, that's not saying that you shouldn't invest in other meme coins. That's not saying that you shouldn't try and find these smaller ones using some of the frameworks that I've showed you today and try and speculate on them as the next 𝗵𝗡 and try and make some money there, because that's where the big gains are, right? At the end of the day, your small market cap coins are going to rise a lot more than your market leaders now. But typically, especially towards the beginning of a cycle, when meme coins are just starting to rise, don't try and play the rotation too early. Maybe now is a better time to play the rotation game than it was a week ago. But even when 𝗵𝗡 was a 30 mil market cap, I was seeing people, right? When 𝗵𝗡 was 30 mil going, oh, 𝗵𝗡's done. I got to invest in this. It's too high market cap. I got to invest in this. Sometimes it's just better off getting into the leader. Like if you tried to time the other Inu coins when Doge was first popping too early, you would have been better risk reward wise sitting in Doge rather than having to expose yourself to the volatility of risk. Now, I'm not saying 𝗵𝗡 is the only market leader. You do have sector leaders here, like other coins in other meme sectors that are popping off. But oftentimes it is better investing in the leader from a risk reward perspective. Now, clearly now, with 𝗵𝗡 running so high in price, you could probably make the argument against that theory, but that theory holds true, especially in the early to middle stages of a meme coin. Now, 𝗵𝗡 may be in its early stages. We may not know how big it can get, but most indicators are indicating that, it's reaching at least the twilight, at least in my opinion, of its run. And that might mean that he's a rotational play. So you got to work out, right, when you're investing, whether you're picking option 1, which is the leader play, or option 2, which is your rotational play. Now, you don't need to just pick one. The beauty of investing is it's all about weightings. So you could go 50-50-50, you could go 30-70, you could go 80-20, depending on how much risk you want to adopt, either following the leader or going to the rotation game. Step number 5, this is some hot alpha, straight off the press. This is following the smart money. So one way you can find new meme coin opportunities after you've done all of the above, you've looked at the hot tokens, you've researched the fundamentals as per my framework, you've looked through the metrics, you've worked out whether it's a rug or not, you've worked out its safety. The next thing to do is to look at, or you can even do this first and then do all of those steps after, is following the smart money. So there are a lot of people that got into 𝗵𝗡 super early, and a lot of really smart meme coin traders which have a good track record that you can track, not necessarily to copy, but maybe get a good idea of what they're buying so you can formulate trends and then copy those trends. So it's very important in this space to follow the smart traders. I accept, and maybe you have to accept as well, that in crypto, there are people a lot smarter than you, and there are traders a lot better than you. They've traded meme coins, they've made millions of dollars, and they have a good track record. And these guys, they're the ones to listen to. They're the ones to pay attention to when it comes to working out which meme coins could run next. So to find new opportunities, follow the whales. Now, here's how you can follow the whales. Go to a popular coin like 𝗵𝗡. 𝗵𝗡 may be even too big. Maybe go to another meme coin that's performed well, but maybe hasn't got as much transaction volume behind it. Go to the last page. So try and go to the very end and work out the first holders. Now, obviously, some of these are going to be like minting addresses. Then you got exchanges later coming in. But try and track these wallets, the very first wallets. This is just the first day, but you can CSV download and work out who's first. 𝗵𝗡's probably got a lot of too many holders, 107,000 now. Makes it a bit harder to quantify. So what you can probably do is go to a lesser known meme coin. Like let's go on Dex Tools. Like something like a Bob, still popular but less less data, or one of these other successful meme coins, Wojak, one of these kind of meme coins. Put it into Etherscan and go to the early holders and take those holders and put them through DBank and work out if they're buying any other meme coins and look at their track record to see what they're doing with that original meme coin. Now, I know it takes a little bit of digging and it's a bit tricky because maybe you're not so familiar with Etherscan, you don't know what wallets you're looking for. I accept that. So if you're not as experienced and you don't know how to find these whale wallets by kind of spending hours going through Etherscan, there is a very good account called Look On Chain that does it for you. So they're on-chain analysts that are literally finding people for you and are tracking all of these wallets. So They have the links to their wallets. If you just go through the profile, they post a lot of wallets. They posted this whale here, which shows you them buying a lot of PEPE. They also have a table with a lot of the smart money. So these are the top 10 people that have made the biggest returns on PEPE. They've put all of their addresses in the description here. These wallets are the ones to track. They've already done it for you, a lot of the work on PEPE. Of course, if you want to do your own work on Etherscan, do it for other tokens, but they've already done a lot of the work for you on PEPE. Go to these addresses, copy them in, put them into DBank and follow them. And you can actually go through. I'll show you how to do it live. So let's say we want to take this address here. Let's copy the address in the top corner, go into DBank, press search, put them in, start looking at what they hold. They have 14.5 million. They hold a lot of PEPE. Go through their transactions, see what they're doing, see if they're buying other meme coins. These are whales that got into PEPE super early. You can track what else they're buying. And you can do this across the landscape with like 10 to 20 wallets and follow them. And DBank's actually cool. It's like a social media. So you have a following tab, which allows you to see what people are doing. It's very, very cool. And I use DBank all the time. So you see they actually just bought more ETH, more PEPE, with ETH. They're buying some other crazy coins. They're buying all sorts of shit coins, but just track. It's interesting to track the ones that they're buying to kind of see, okay, is there a trend here? Are all of these wallets buying one thing? Is there a trend? Is there one thing that I'm seeing stand out amongst the rest? I'm seeing Turbo. A few accounts own that. I'm not saying to buy that, by the way. I'm just saying, like, look into it. Do some research. See what the whales are buying. They're probably a lot smarter than you. Someone has said, check Turbo. Well, this whale holds a lot of Turbo. He holds how much? $1 million in Turbo. It just gives you an idea as to what these big guys are buying. And I'll even do a third one for you right now. Go through all these wallets, have a look, track them, follow them on DBank. I do a lot of on-chain DBank stuff these days. Not just when it comes to meme coins, actually more so when it comes to bigger coins to work out what whales are trading and buying. This guy just owns a lot of PEPE. Let's go into another one. Let's go into DBank, see if they hold anything else. Some of these guys are just trading PEPE. Some are DJing into other coins with profits. That's fine. This guy has some Chad, $17,000. He has $3,000 worth of Popo. So yeah, go through and see what they're buying and see what they're trading. And some of these guys are just buying absolute shit. So don't just copy everything they do, but at least it gives you some substantive basis to kind of leverage to research off, right? Work out what the whales have. So all of those steps that I just talked about are ways to conduct fundamental research. But once you picked a coin, you're now ready to buy. Now, how do you approach the trade itself? So let's say you've gone through all of the fundamentals. You've worked out a list of 5 meme coins that you think tick off all the boxes we've spoken about, are showing good hype, are showing good fundamentals, and you want to play this meme coin train. How do you actually approach buying these coins? Well, the first thing you have to do is treat it like a casino. So any dollar you put in, just be willing or happy to lose it. The best way to actually conduct this and follow this willing to lose mentality, because I know most people say, I'm willing to lose it, and then they lose it, and then they're actually still upset. The best way to kind of remove emotions, which will make you a better meme coin trader, is to trade it on a separate on-chain wallet. So create a new MetaMask wallet, fund that wallet, and any money you trade in that wallet, that's your meme coin money. All right, if you lose it, you lose it. You're willing to lose it, but it's separate from your investments. I see a big mistake people are making at the moment, and that's trading meme coins in their portfolios. So you'll have a portfolio with your long-term ETH. You'll have a portfolio with these DeFi coins you're trading, and you'll also have short to medium-term narrative trades in the same wallet as these speculative meme coins. No, that's wrong. It's going to wreck you because everything's getting mixed up. I mean, if you're very mentally sound, you can do it, but why not just create a new wallet, have a very separate meme wallet, and all the profits you make from that wallet flow back into your base wallets. So you actually make money in your separate wallet on-chain. Every time you make money, you transfer it across to your main wallet, and you take profits in your main wallet. That's much better than taking profits in the other wallet, because if you take profits in your meme wallet, you're probably just going to put it into another meme, and you're going to rotate and play the hot potato game all the way to zero. So it's very important to have 2 on-chain wallets. Now, yes, you're going to pay a lot of gas, which means how often you trade in and out of coins is going to depend on your size. If you're only putting $100 into a meme coin, well, good luck on Ethereum right now. You're instantly going to be down 10%. So maybe you're better off looking at some other chains, like an Arbitrum. Look at some meme coins over there. Because the problem is with Ethereum gas, it's only really worth it a lot of the time to trade in and out of these coins if you have I would say a few $100s to thousands plus. For a lot of people, the gas is just too high right now. So just be very wary of that. Now, okay, maybe you are happy to take a 10% loss if you like a coin, happy to pay that premium in gas, cool. You just have to accept that you're not going to be able to ladder out as frequently or ladder in as frequently. So there's no point, if you're investing $200, there's no point doing 4 buys of 50 because every time you're slicing 25% off with gas. 50, 50, 50, 50, you only really end up with a $150 position at the end of it, which is not good. What you would probably be better off doing then, and we obviously don't recommend this when it comes to typical altcoin trading, but due to the fact gas is really high, at the moment you may just have to do 1 or 2 buys of a coin, which means you're going to have to be a bit more selective with your timing. Because DCAing in is the best approach, but only if you have the right amount of money. If you're trading on the Ethereum chain, you're going to need at least 500 to DCA into a coin with 5 bytes or 3 bytes. If you only have $100, it's much harder to DCA in. Now, there are exceptions. There are a lot of coins listed on centralized exchanges, but that's not always the case. You do have like PEPE on ByBit, you have PEPE on OKX. By the way, guys, before we get into the next buying tip, remember that we have the Tesla giveaway on OKX. So we just had the Maldives prize. I've selected the winner. The winner is going to be notified by email. If you are one of the 5 lucky people that emailed in, the first one of you will be emailed with the Maldives holiday. Next, though, is the Tesla, and we're currently in the Tesla giveaway. So we're in May 8th right now. 2nd of May this started. You still have almost 3 weeks, 2.5 weeks to get involved. If you trade, the more you trade, the more raffle tickets you earn, which can put you in the running to win either $50,000 or a Tesla Model 3. Pretty crazy, this competition. Every $10,000 in trading volume, you get an extra 5 raffle tickets, but all you need to do is invest $1. They also have PEPE, and they're listing meme coins as well. I'm not saying necessarily to trade that, but if you want to trade that, of course you can, and even $1 will put you in the running for a Tesla. So, of course, the more you trade, the better, but you could still technically win if you put in $1, and this is pretty cool. So, link in the description to OKX. It's the first link. Click on that link. Click the Join Now button here, which will join you into the comp, and once you've registered, as long as you trade on spot or derivatives, you're earning towards this Tesla. So you've just gotten until the 22nd of May to trade. You don't have a lot of competition either. So actually the OKX giveaway, it does not have that many participants, which means you may have like a decent chance of winning. If you do enough trading volume, you may have like a 1 in 100 chance of winning. That's just an arbitrary number. I'm not exactly sure, but I just judging by my personal numbers that I've looked at, there isn't that many people getting involved. So that's actually a reason why this from an EV perspective is actually probably pretty good. So there's a link in the description to that, and of course the ByBit thing as well if you're a trader. So let's get on with the next tip, and that is to use TA to help you get entries. So I said before that you might need to be a little more selective now due to gas with where you get entries, and I think that just means you're going to need to incorporate technical analysis a little bit into your strategy. So now, due to liquidity constraints and lack of historic price data, accurate TA is very difficult on these coins. So although it's not going to behave like Bitcoin, where you have like years of price data and massive psychological levels, you still may be able to come up with some sort of plan just so you make sure you're not going in blind. For example, PEPE, we had this flag structure. This was the structure we were trading off. We broke out. We got a lovely trade to the upside. The next horizontal touch perfectly. We had a breakout, came back down, horizontal obeyed, came back up, tested the bottom of the wedge. Now we're probably about to get another move. PEPE's been respecting trends quite well. And the interesting thing about meme coins is although they don't have historical price data on the low time frames, like the 30-minute, the 1 hour, etc., they're actually following TA quite well. I don't know if this is just because every meme coin trader is using the same TA or what it is, but it's weird. A lot of these are actually respecting trends quite well. So I would use TA to get decent entries, which basically just means you're not buying into the very tops. You're waiting for pullbacks or breakouts. So you're waiting for key breakouts of key horizontals. You're waiting for pullbacks into key zones. No, the TA is not the be-all and end-all when it comes to meme coins, but what it does is it just increases your risk-reward ratio because you're just getting a slightly better entry. You're getting an entry on hype if you're breaking out, and you're getting an entry on a discount if you're getting a pullback. So those are the two conditions I would buy a meme coin on. I wouldn't just buy blindly into a huge pump. If you can DCA, into significant corrections, that is the way to go. On PEPE, this worked really well. So on PEPE, all right, we knew that the price was going up. Let's say you wanted long exposure, you actually would have had huge trades just with the volatility here. So if you just bought every dip, you bought this dip, you'd instantly be up 100%. Then it dipped again, you'd instantly be up 500%. Then it dipped again, so you had another 44% drawdown. This thing had huge drawdowns. Like this drawdown on BitGet was 61%, 44%. Then you get a huge leg to the upside, 390, and then you get a massive drawdown again of another 40%. These things draw down huge. So what you want to do is actually buy the big drawdowns. Every time you get a drawdown, buy the drawdown if you want to build a long position. And every time you get a major breakout, you can look to buy that breakout. There's the breakout. There's the breakout. If you draw the horizontal in here, there's the retest of the breakout on PEPE. These are the levels you want to be buying at. Major pullbacks and major breakouts rather than just aping into like prices when they're in price discovery. Now, sure, you're in price discovery here, technically. If you bought, technically you would have made money before the next retest. But the problem is there's no real way to work out where things are going from there because there's no data. So that's why I prefer using key levels. Like this breakout was the better level for me to buy. This retest was the better level for me to buy. I actually traded last night on the retest of the bottom here. That's what actually sent me to rank 41 in the comp, trading that retest. So it does work. It does work. Now, it depends whether you're trading or you're holding. If you're trading, then that's a different game. You're going to need to be more selective. If you're holding, well, in truth, you can kind of just buy and hope. Because that's what the meme coin game is. As long as you've done that fundamental research, then it becomes a game of luck. And at that point, if you want to play the game, if you're determined to play the game, you're going to play the game, right? So it's better just to get a position, but just keep the TA in mind. Now, a lot of you are probably seeing some meme coins and feeling a lot of FOMO. There might be some memes you really want to get into, but the price is pumping. So let's say a token's in price discovery. You're feeling FOMO. You want to get in. You haven't gotten that entry. There hasn't been a pullback. There hasn't been a key breakout for you to trade off. What do? Well, there's an emotional strategy which you can actually use, and that's hedging by going long. Now, that sounds freaking crazy. Hedging by going long? What does that mean? Well, you're not hedging against price, but you're hedging against emotion. Because what tends to happen is, let's say you want to get into a meme coin, the price pumps, you don't get in because you say, oh, it's already pumping, but then it pumps even more, and now you're really FOMOing. You're probably just going to FOMO in, right? You're seeing the price pump, you've been sidelined, you really want to buy, you're probably just going to FOMO in. There's nothing wrong with that emotion. That emotion in crypto is normal. So sometimes it's actually better just to avoid that emotional toll. And you got to know your own emotions. If you don't get FOMO, you can, and you're happy to sit on the sidelines and wait, and if you miss out, you miss out. Cool. If you are like me, I'm a little bit like this, and you actually get a bit emotional and you get FOMO, that's okay. Just recognize that that's how you are as a human, and think of ways to hedge against that emotion. And for me, one of the best ways to do that is just to get 20 to 30% of your entry in. So you want to buy a meme coin. You're not sure when to buy. The price is pumping. You haven't gotten that pullback that we talked about on the TA. It's okay. Maybe just put in 20 to 30%. So if you wanted to put $500 into the meme coin, maybe just put the first 100 to 200 in and save the other 300 or the other 350 for that really good TA entry. But maybe just get a little bit in just so you have some exposure so you're not completely freaking if you're on the sidelines. So if you're feeling FOMO, sometimes you can hedge against your position. Now, of course, once you've made money on a meme coin, the important thing to do then is to take profits. So once you've made insane cash, like we did on PEPE after trading this breakout, we were up 10x. I'm saying we because I know a lot of you guys traded this with me as well and are up. We did a poll on last show, and I think like 70% of people actually did buy PEPE, which is amazing. If you made crazy profits, 5, 10x, like we're 15x up, then you have to start making decisions. Hustle, I think it was like 30% up, 30x up. It's crazy. Then you have to start making decisions as to taking profits. Now, you have to take profits if you make life-changing money, because otherwise you haven't made life-changing money. If you don't use the money to change your life, it's not life-changing. So if you make a 10x or an 11x or a 20x or 100x, it's all cool, but don't round trip. I've round tripped before on meme coins, on altcoins. I did a lot of round tripping on during the bull run. I think a lot of us did. Don't make the same mistakes again from the bull run. Make sure you actually take profits this time if you're up. And an easy way to do that is to take your initial entry out after a 2x. If you're a bit more degen like I am, maybe you don't take the full entry out. Maybe you take 50% or 25% out. So you're writing with house money. So house money meaning gains instead of an initial position. Technically, house money is still your money, by the way, so there's no difference. But at least psychologically, you're not in a loss. So you've taken your initial out. And as the price keeps increasing, let's say every time it 2x's, every time you make another 100%, you can take another percentage out. So this could be another 50% of your initial position out. So if you put $1,000 in and it goes to 2,000, you can take 500, and then it goes to 3,000, you take another 500, and 4,000, another 500. Or you can scale it. So the more the price goes up, the more you use a percentage. So it might be 50%, might be 25%. I can't tell you exactly what take profit strategy to use, but what I would do is I would ladder out. Now, if you're on Etherscan and you're only trading with a $100 position and you're on the Ethereum network, you're probably going to need to be a bit more selective and not ladder out as frequently, because if you're laddering out frequently with gas, you'll probably spend a lot of gas money. So maybe do it every 100% or every 400%. Someone in this chat made wife-changing money. 100%. I made good money, but it wasn't wife-changing because I already had money. So unfortunately, it wasn't wife-changing. But I know a lot of you did make wife-changing money, and that's amazing. Congrats to everyone that did. I made good money, for sure, but not, nothing that changed my life because I didn't put in crazy size. I just put in money I was willing to lose. I just put in money I treat it like a casino. I think everyone should really do this, and I traded money I was willing to lose, and that's fine. There are some indicators on screen for when, so sure, you can ladder out of a coin, but there are some indicators that start to hit to give you an insight as to whether you want to really take a big position out. Like when the 24-hour trading volume starts flipping the market cap. So we can see here, this hasn't quite happened yet. It did for a period, but it hasn't sustained higher than the market cap. That's one of your not local top, that's one of your top indicators. To really get out of a position hard and not just ladder out. The next one is looking at the funding rates. So if they shift from negative to positive, or significantly have a huge jolt. We haven't seen this on PEPE. They have started going slightly positive. That indicates people are starting to short more, but they aren't crazy positive yet. When that starts happening, that's an indicator a lot of people are shorting. Another thing you can do is actually look at the holders. PEPE is increasing 2% a day, but at what point does this start decreasing and dropping significantly? That would be your top signal when people start to exit. And the other thing is lower, so use TA as well. A major exit signal is lower highs being formed in a high time frame. Once again, something we haven't really happened on PEPE, but if you go to the daily, you start to get price action like this, where you have lower highs. Big lower highs indicate tops. So that's also something. I'm using PEPE as an example, but you can do this on any meme coin. So those are your top signals for exiting. So those are my tips. I hope you guys enjoyed this video. I'm going to expand on this in tomorrow's show, but I would use this video as your ultimate guide for fundamentals behind meme coins. Now, in the description, I've linked this thread, which has a lot of the strategy there written for you. Obviously, I've explained it more today. And you can have that for the future when you want to have it, or just come back to this video. Even in 6 months' time, I still feel like a lot of this logic will check out. On screen are PrimeXBT codes. They're also in the description. First come, first serve. The last 10 codes I give away were eaten up very quickly. So if you want to fight a $50 bonus on your PrimeXBT account, deposit 200, get 50. 5 codes in the description. Go. The ones that sign up using the link in the description to PrimeXBT will get that. And there's also a sign-up bonus. So link in the description to that. And also the trading competition for ByBit. I'm ranked 41 now, so I'm gaining steam on the other hosts, which is great. My aim is to beat them, so hopefully I can stay ahead. I was trading PEPE. I plan on continuing to trade PEPE in the comp because it's just a fun coin to trade. And OKX as well. We got the giveaway with the Tesla, so that's also in the description. If you're not getting involved there, just remember to do a bit of trading on there if you want to get the Tesla. If not, all good, but thought I would mention it to you guys for the ones that do. I think we're all good now. I will see you guys tomorrow. Hopefully you enjoyed this video. And good luck if you are trading meme coins. Hopefully you have some success. Hopefully you can make life-changing money. But just remember to be careful. Don't get too sucked into the hype. Only use money you can afford to lose. And until the next one, I'll see you tomorrow. Peace out.